Somebody's widow just got denied a life insurance claim. Her husband is paying his whole entire life and nothing now to show for it. Meanwhile, people online are calling life insurance a scam. Grant Cardone says your 401k is garbage, and folks on YouTube are warning you that MLMs, like mine, are ruining lives. I've seen the headlines, I've seen the hate, but I've also seen the truth. With real families, real numbers, and real freedom. So in this series, I'll be reacting to the noise, the nonsense, and yes, some facts that'll shake you up. We're talking tax loopholes, Kobe Bryant's mentality, a morality, Patrick Bet-David's rise, and what the Bible actually says about being wealthy. So if you've ever been torn between fear and faith, doubt and direction, this is the episode for you. So don't blink, don't scroll, stay right here. Let's break the myths, expose the lies, and rebuild the truth right now.
He wanted to know how much I was going to get when he passed.
Sharon and Alex Morris of the Belleville area were married 54 years. Alex was diagnosed with terminal cancer in December, and as his health deteriorated, he wanted to make sure his life insurance would be there for his family.
He knew he was dying, and he wanted me to call ahead of time and find out so that he could know that I had something coming to me.
For 43 years, he had been paying for life insurance, a base policy of $5,000 plus dividends, and a term policy that would pay $25,000. In January, when Sharon called to check on the policy, she was told she would get both amounts if her husband passed.
They told me that I would get the full amount, but they needed a death certificate.
Alex died on February 25th. When Sharon phoned back the insurance company, she was told that part of the life insurance policy had expired 3 weeks earlier.
And they refused his $25,000 rider that he had on his policy.
Sharon was paid just over $7,000, but the payout for the $25,000 term policy was rejected. Sharon says it's her belief the term policy had not expired, and she says if it had, she should have been told that when she called.
I'm terribly upset about it because they told me I was going to get it.
The Morrises had the policy with Canada Life. A spokesperson told CTV News, "While we cannot comment on the specifics due to privacy, we've worked through the exceptional circumstances of this case to deliver a solution for our customer." In the end, Canada Life decided to pay Sharon in full the $25,000, which was a huge comfort for her.
It's a very big relief. He was so worried that, I had to get that money to keep me going. Thank you for CTV for working for me. I'm very, very grateful. He wanted to know how much I was going to get when he passed.
Sharon and Alex.
Okay, so just full disclosure, I'm watching this video the same time you guys are watching this video, so I didn't prepare for this. This is raw, unprepared. I'm reacting to it based on what I just saw too as well. So a couple things come to mind. Number one, there's a difference between you working with a life insurance agent that's actually in the field, working with actual clients, versus you picking up the 800 number and talking to a customer service department. I'll tell you this, I've been doing insurance now for 26 years. And the big rotating door at life insurance companies is the customer service staff. In fact, one of the insurance companies we're doing business with, we're about to not do business with them because their customer service was horrible. It was forever for us to get through to somebody, let alone our agents trying to process through new business, let alone a client trying to find out what's going on with their policy. I promise you this, customer service representatives at most life insurance companies do not know how life insurance actually works. They're just reading things on a screen. They're just reading things on a computer to relay information that you're probably seeing on your end, but they probably have no experience with life insurance outside of them working for a life insurance company. So go back to your agent. Go back to a agent. So I see they're older, their agent that probably sold them the policies may either be older, retired, or sadly passed away. It makes sense for you to take a review. If you're older, take that same policy, have an insurance agent review it, find out what the gaps are, find out what the loopholes are, find out what the contractual agreements are with the life insurance policy. And from what I see about this case study, they bought a whole life policy. It wasn't the way the episode looked. It had two different insurance policies, a whole life policy and a term policy. But for her language, she says rider, which means that she only had one policy. So they bought a term policy of $5,000 and he paid additional premium to the insurance company for a $25,000 term rider. And so when you write a whole life policy with a term rider on it, you actually tell on the application when you want that term to terminate. Means that this coverage that you're paying for, in this case, $25,000, you can pay it for 5 years, you can pay it for 10 years, you can pay it for 20 years, you can pay it for 30, whatever the term is, you'll be paying that additional premium as long as the term rider is in force on that policy. But you're right. An agent would have said, hey, by the way, your term rider might be expiring in 3 weeks. Instead of going through all the rigmarole, think about this. If she didn't have the California, or was it the Canada TV advocating for her, fighting for her, and potentially putting some bad PR for this life insurance company in the news, she would have been stuck without that $25,000 term rider being paid out. So have an agent review your policy. And somebody that specializes in life insurance, somebody that understands life insurance. Don't get caught up in going to State Farm or Allstate. These guys are property and casualty insurance licensed. And they might be a life and health license, but their forte, their focus is 80, 90% car insurance and homeowners insurance. They may not know the details. A lot of them may, but some of these property and casualty homeowners insurance agents may not know the caveats and the language that's written on a life, because they may not even be life insurance licensed. I've seen a lot of guys with car insurance license, homeowners insurance license, but they don't know the cousin of their industry, which is the life insurance industry. Same thing too, I would say about a financial advisor. Just because somebody says a financial advisor on their business card doesn't mean they're actually a financial advisor. What I've discovered, just because they have a Series 7 license, just because they have a Series 65 license, just because they have a Series 6, Series 63, CFP, Certified Financial Planner designation, CPA, attorney behind your last name, or alphabet soup behind your last name, doesn't necessarily mean you know what life insurance is about. They don't know what life insurance is about, because this is a specific form of insurance that requires training and continuing education. Now, somebody may give you their opinion, but even within inside the life insurance industry, look for somebody that understands how to articulate the details of these policies. So therefore, you're paying for something that you know you're getting, and a proper review with the life insurance agent will make sure your coverage is in force, nothing lapses. And by the way, here's another one I'll throw at you. Lots of people get these things in the mail from their bank, their credit union. If you sign up for $5 or $10 or $15 a month, you're gonna get life insurance. No, it's not life insurance. It's credit life insurance, meaning that something happens to you, they're gonna pay off your debt. They're not gonna pay anything for your funeral. They're not gonna pay anything for you to replace your income that you're providing of $25,000, $50,000, $100,000 a year to your family. That credit life just means to pay off your debt. Same thing to a PMI, private mortgage insurance, for those of you who have homes. That's meant to pay off the lender, the bank, not you. The check doesn't come to you. So these things are areas you need to focus on when working with life insurance. You don't want to be putting your money in. By the way, this is an asset. This is an asset class. Life insurance, this is property. Tax-free, according to IRS Code 101A, something that you can transfer to your family without paying a dime in tax. Don't take somebody else's word for it. Make sure you're working with a life insurance agent that understands what they're doing with life insurance policy. Such a good point. You know what else is a good point? The fact that most people scroll through life getting advice from people that talk about they're a guru, but they got no receipts. I'm Matt Sapaula, Marine Corps veteran, entrepreneur, and founder of the 7 Figure Squad YouTube channel and a podcast called Just Earn It. Faith, finances, family, legacy. And we cut through the fluff. We talk about the stuff that actually matters. Real conversations with leaders, investors, protectors, creators, and builders. If you're tired of recycled advice and you're ready for conviction, for clarity, and for cash flow, connect with me on Connect. I take your questions personally and answer them personally. So don't just watch content, get in the conversation. Connect with me today. And now, back to the conversation.
Do retirement accounts.
Yeah, definitely not.
I have a lot of money in my 401k.
Okay, I'm sorry.
I thought
I'm
that
sorry
was
for you.
Why do you feel sorry for me? It's a way to put money in without paying taxes on it.
It's a way for you to be trapped for 30 years.
Well, you can pull it out when you're, what,
63?
63? I thought it was 59 and a half. No,
You don't know.
something like
63.
that. Yeah.
And by the way,
you just pay taxes
how old
on
are you
it.
right now?
By the way, Vlad here is right. 59 and a half years old, you can pull your money out of your 401k. I don't know what Grant's talking about, 63 years old. Listen, there's a lot I don't like about Grant Cardone. The one thing I do think he is a brilliant marketer. He's a very articulate communicator. When it comes to some of these details of finances, I don't know why my team's got me reacting to this guy, but I don't have a lot of credibility with him to begin with. I did a video here on Grant Cardone and picking the right business partners of his issue with Gary Brecka. But let's continue with this dialogue here. What they say about retirement account, 401k accounts being a scam.
Now,
50.
yeah, man, I hope I look as good as you when I'm your age. 13 years from now, will taxes be higher or lower?
Higher.
You will wish you would have sold it when you were 50.
By the way, I just mentioned I don't like this guy, but this guy's right. Taxes potentially may be higher in the future. And when you put your money inside a tax deferred account, which means a tax later account inside a 401k, you're deferring to pay taxes on those assets at cash at a later date in a potentially higher income tax rate that we are today. I agree here with Grant.
Because you'd pay lower taxes, dude.
You don't pay any taxes when you sell, when you pull out money out of your 401k if you wait until you're 63.
When you start using that money, you're going to pay taxes, bro.
The moment you pull out money, period, I don't care if you're 25, 35, or 65, you will be paying taxes. If you're under 59 and a half years old, you'll be paying an early withdrawal penalty of 10% on top of your income tax that you owe. So in other words, if you pull out, let's say you're 40 years old, you pull out money out of your 401k, and it's a non-emergency, you'll be paying, let's say, 25% in federal income, whatever your tax bracket is. This example, do 25%, and then you add on another 10%. So 35%, when you pull out $1,000, they're going to take out $350 with the taxes and early withdrawal penalties. So you really net $650. So if you need $1,000, you really need to be pulling out, in that example, about $1,500, pay taxes of $500, so you can net $1,000. See how much that drains and adds to the additional withdrawal you need to make to account for tax deferral and tax later type of accounts. So bottom line, there's three major tax buckets you could put your money into retirement. Tax now, every year money grows, you can pay tax on it. Tax later, you defer taxes to a later date. Or tax advantage, you pay tax up now, but you don't pay taxes on it later on down the road. Like Roth IRAs and life insurance retirement plans.
Bro.
When you pull the money out
And start using that money, you're going to pay taxes.
you're not paying taxes.
That's
When you
true.
pull money out of your 401k,
You weren't charged taxes while it sat there.
It's true.
What's wrong with you? Oh my God, guys, hammer him in the comments
hold on
right
a
now.
second.
Okay? What the fuck happened to you, bro, with this goddamn degree you got?
well, hold on a second. Well, I didn't.
Do your research. You're
The
not
IRS
you're
allows penalty-free withdrawals from retirement accounts after the age of 59 and a half.
penalty free, not tax free.
That's true, Grant.
So they're going to fucking charge you a penalty. They're going to put handcuffs on you to sell it before then. But dude, when you're 50, 63 years old, when you start withdrawing, you're going to start paying taxes at that point. And the taxes, like you said earlier, are going to be
Yeah,
are
you're
gonna
right.
be high.
401k withdrawals are taxes in.
Exactly. So check this out.
Oh, I see what you're saying. Okay, right.
Look what this fucking Biden guy's saying right now. Your
Yeah.
boy, the guy you love so much. Okay. Look, he's saying let's take capital gains to 44% right now.
Which is what, 15% now? Usually?
Right now they're 19.
19.
19.
He's talking about Biden, your boy that you like so much. I think he's referring to Biden. 'Cause I believe Vlad is in California and a predominantly Democrat state, so I think he's talking about Biden in this scenario.
Wants to take them to, I think, 44%. Canada just took them to 66.
Shit.
The last time, so imagine if in the next 13 years, taxes are going up. You said that. Imagine that the taxes aren't 19% capital gains, but they go to 39 or 59 or 66.
No, I see what you're saying.
The way
So-
Canada said, then they're going to get you, bro. Now, I believe that Wall Street and the IRS got together and said, hey, we want to capture this money for long periods of time, and we'll benefit you by hammering these people, hundreds of millions of them, by the way, trillions of dollars.
That's true.
Okay, trillions of dollars. $38 trillion is sitting in IRAs and 401ks. $38 trillion.
I think Grant knows that because he's attempting to attack 401ks and retirement accounts who predominantly invest in the stock market, stocks, bonds, mutual funds. And because he owns Cardone Capital, which invests in real estate, you can actually create a self-directed IRA. You can roll over your money from that 401k, either when you retired or when you're in between jobs. You leave that former employer. You can roll that 401k into a self-directed IRA, and you can self-direct those investments into other things like real estate, like precious metals, like collectibles, like other stocks, bonds, and mutual funds and annuities, et cetera, et cetera. But his play is to get in that asset class to do 401k rollers into self-directed IRAs. Then you can invest that into Cardone Capital investments. That's probably why he knows how much money is inside stock market, 401ks, and IRAs, which should tell you a ticking tax time bomb in America today is money with inside 401k plans and retirement accounts. I interviewed a guy by the name of Ed Slott, which is America's IRA expert. Right here, you can watch this video here. His ticking time bomb is not only the losses you potentially can suffer by having your money in stock market like direct investments, like stocks, bonds, and mutual funds, etc., but also the things that will blow up down the road will be taxes down the road. Third thing is healthcare down the road. So he talks about the ticking time. I called it the 5 gotchas of money. That's why I wrote the book. But these are the ticking time bombs in our retirement savings situation in America. And that's assuming that everybody in America is saving money, because I did another episode where people aren't saving any money in America. They're making money, they're blowing money. They're making money, blowing money. They're not putting money inside 401ks. They're not putting money inside IRAs. But enough people are putting money in America. There's trillions of dollars right now inside IRAs and 401ks that if stewarded improperly, if managed improperly from a tax situation, it can trigger a whole lot of taxes. And guess who benefits? The IRS, the United States government.
So you were right. When you pull money out, it gets taxed as income. But the whole time you put it in tax-free and it grows.
Yeah, exactly.
So it could grow bigger because you put more in.
It grew, but the problem is
you pull tax on the back end.
The problem is that dollar was also being devalued for 30 years.
This is true.
Okay, so how much you got in the retirement account? Let's say you got $2 million. Okay. If inflation does exactly what it did in the last 4 years, you got what, 13 years? If it does in the last 4 years, your account got hammered by 500 grand, 25% lost in value, the US dollar. If that continues, and it will, because we'll continue to print money, you could literally lose 100% of the value of your 401k simply by the cost of goods going up and the purchasing power of your dollar going down.
Yes, but if the money is actually growing faster than the rate of inflation, then you're okay.
Yeah, but you're not.
My investments grow faster than inflation.
Well, what did it grow last year?
Oh, man, I think I made about 37% last year.
Nah, you didn't.
Yes, I did.
No, you didn't. I bet.
Grant Cardone is doing that because he's trying to pitch everybody that's watching this, power players or Vlad TV, that his investments in real estate are better than what you can earn in stock market. So that's why he's like, no, you didn't. No, you didn't. By the way, so just the timestamp of this video is 2024. And Vlad TV, he's saying that he made 37%. But in 2024, the S&P 500 returned 25%. So if Vlad's off a little bit, let's say the lower being 25%, I promise you that beats any type of real estate investing that Grant Cardone is potentially going to offer you. So what he's trying to sell you is, hey, put your money inside real estate so I can get you a higher return to beat inflation, to beat the stock market. But in this case, Vlad made more money in the 401k in the stock market, earning higher than 25% return. He's claiming 37%. So that's why Grant goes like, nah. Well, facts are the facts, bro. 2024, S&P 500 did 25%.
I bet you another 100 you didn't make 37%. But if you did, great, man. Were you in all tech stocks?
All my money is in Amazon, Google, and Tesla.
Well, good.
Okay, good.
But you did.
I can tell you exactly
Then
how much
you
I
did.
made.
But you're not in mutual funds, and you're in something else.
No. I'm in actual individual stocks.
Yeah.
My 401k is all in S&P 500.
Okay.
But my personal investment is in those 3 companies.
Yeah. Okay. And, well, good for you. So you're a rich dude. You're an exception to the rule.
I'm okay. I'm not as rich as you. Hold on. I'll even tell you. Hold on.
No. If you're in those, bro, you could be.
In 2023.
Yeah.
I made 83% off my stock portfolio.
Yeah, good for you.
Now, in 2022, I lost 40.
Did you sell any of them?
Didn't sell any.
So you ain't made shit.
No, it's all in paper.
You ain't made shit, bro. It's like me looking at some hot pussy and not hitting it. I didn't get pussy. I looked at it.
In 2022, I lost 43%.
Okay.
But I didn't sell. I bought more.
Well, good for you.
So the next year, I made 83%.
Bro, you're an elitist.
I'm an elitist. Okay.
You're an elitist. You're a goddamn colonist.
I'm a colonizer?
Dude, you're a colonizer. Somebody called me a colonizer recently. I'm like, what is that?
Oh, that's a Kendrick Lamar line.
Oh, is it?
That's the new culture vulture or honky or cracker or whatever.
Okay, yeah.
Colonizer. Yeah. That's the new term.
I said, it sounds good.
Okay. No chasing relationships.
Yeah, I wouldn't.
Popularity and approval.
Yeah, I wouldn't. If I was a young guy on the way up right now, I would not be chasing pussy every day.
Drugs, alcohol, and partying.
Definitely.
You had your, your time with drugs.
Yeah.
No investing in mutual funds or stocks.
Yeah, that's right.
I disagree with you on that, but that's cool.
Goddamn, you ought to interview yourself.
Buying houses, cars, and watches. I love my watch collection, though. What do you got on right now? What you got?
It.
Yeah. You got a Patek Philippe.
Mm-hmm.
Those things actually hold value.
Not really.
Yes, they do.
They're getting hammered right now.
Are they?
Everything.
Every
watch.
I haven't bought a watch in a while.
Every fucking watch out.
But
every watch. The
more or
Rolexes,
less-
the Pateks, the Richards. The Richards has gotten fucking slow.
Oh, yeah, the Richards got slammed. I was actually thinking about buying one a few months ago.
Yeah. Don't.
No?
Oh,
Piece
Richard,
of garbage.
You
own
own
three of them.
You own 3 of them?
Yeah.
All right, sell me one of them. Give me a good price.
Okay. Why? But why? I didn't buy it. It's a piece of garbage. Like,
Therapists analyzing your personal issues.
definitely, dude. Would not touch those guys.
Really?
Those guys
I
cost
got
me.
a great therapist, actually.
God damn, dude. I don't even know why I let
But my therapist has helped me through some hard times.
Good for your therapist.
Okay.
Good for you. We're not even sure you're through the hard times.
All right, I don't know where this is going, but I'm getting bored watching these guys. These guys are just having a freaking pissing contest whose cock is larger. Hey, man, listen, man, just be glad that you're in business, that you have an opportunity to create value in our country, the greatest country, America, and you have the opportunity to do something great. All right, well, let's look at the next video.
Or it's Donald giving you a call back.
Yeah, I know, 20 times in a row. How stupid are you?
Yeah, I'm just giving you a call because I have your information right here in front of me, and like I said, I know it's annoying, but it's my job to make sure families are protected and families are financially secure.
Oh, he's selling life
So again,
insurance.
My job to turn you in a no call too.
Absolutely, if you feel that's necessary, but again, all I'm trying to do is making sure that you're.
You'd be an asshole.
I apologize, sir.
You're worried about somebody dying, and I ain't worrying about it.
Absolutely, everybody worries about it. You know, it might not be a worry as of right now, but
My brother-in-law just passed away Saturday, and I ain't worrying about it.
absolutely. Unfortunately, I lost my brother-in-law in September, so I completely feel you there.
So why should I worry about it?
Hey, you know, is your funeral already taken care of? You know, family's not gonna have to come out of pocket for that. Well,
Ain't none of
like I
your
said,
business.
Absolutely, it's none of my business. That's why I'm asking you.
Well, you call one more time, and I'm going to block you, and then I'll call the law for you aggravate.
Or it's Donald giving you a call back.
Yeah, I know, 20 times in a row. How stupid are you?
Yeah,
I've never, in my entire 26 years in the life insurance industry, ever made a cold call. I don't know how to really react to this because he's doing something I've never been done before. And yet we built a company and sold it for nearly $300 million. And I have a life insurance size team of 5,000 agents across 8 major offices across the United States. We've never made cold calls. We've never bought leads. We built a company from scratch, from nothing. Ragtag guys, no fancy degrees, no long experience in business, no pedigree, no success in anything they've done before to any magnitude. And we built a company from referrals, and learning how to get introductions to influencers and decision makers. So, in my opinion, this is the hard part of any sales job. If you're put in a sales position to make cold calls, and especially life insurance, you should have to be wasting time selling life insurance, buying leads, and calling people like this that don't want to talk to you and that wants to report you to the whoever. Do not call anti-spam compliant laws, FTC, etc. And it looks like they got a boiler room of guys. To see the guy in the back there, he's making calls too as well. Why waste your time making cold calls? Selling life insurance? Everybody in America needs life. From 9 days old to 90 days old, people need life insurance. And I love the life insurance business. But you got to approach people the right way, though. You got to approach people from a referral or introduction, adding value, asking questions. See, here's the thing. Amateurs tell. Pros ask. Especially when it comes to life insurance. I was talking to a realtor. They're getting involved in the insurance business. I asked them one question. Out of 10 people, how many people right now are qualified and ready to buy a home for you? They got the credit score. They got a down payment. They got bank statements, tax returns. They're ready to go right now. They're going to be approved to go buy. So therefore, you can justify yourself showing them 10, 50, 20 houses in the next 30 days. Out of 10 people, who's ready to buy a house right now? You know what she says? 2. I said, what about the other 8 who's renting right now? Well, they got to get their credit score, they got their income higher, the DTI, debt to income ratio, all that. Think about that. Out of 10 potential individuals, 2 are your prospects. And of the 2 who are really qualified, of the 2, she goes 1. So really, you're looking at 1 out of 10 people. Okay, flip it. In America, how many people need life insurance? Every one of them. From 9 days old to 90 days, everybody needs a policy. College education policy, final expense policy, mortgage protection policy, basic income replacement policy, infinite banking type of policy, early mortgage payoff strategy policy, pension maximization policy, split dollar, key man policy. I remember when Oscar De La Hoya invested $10 million into our company. I'm sitting right there watching our CEO, Patrick Bet-David, get his blood work done because he's getting a key man policy that just in case something happens to the guy that De La Hoya invested in, he gets reimbursed his $10 million back to the investors. See, it's a key man policy. There's so many different ways to sell life insurance. This is the hard way. So if anybody here is looking at the life insurance industry and this is the way to build your career, bro, God bless you, man. God bless you. Have a conversation with people, cigar lounge, wine bar, your church group. Genuinely go to approach people, ask them of their opinion of what you're learning and what you're educating the community on. I remember coming to my 7th grade teacher, Mr. Novak. I say, Mr. Novak, listen, I just got started in the life insurance business. Is there a way I can teach my teacher what I'm doing? Because later on down the road, 6 months from now, 12 months, if these situations, these scenarios come up, you know who to call? Because I'd be happy to learn from one of my former students what they've learned about retirement. Because I'm about to retire in the next 4 or 5 years. And guess what happened? Not only did he come on board as a client, we saved them from the Great Recession. We saved them from losing the value of his home, the equity built for 30 years in a practically paid off house. We saved that equity. And guess what he did a year into the recession? Bought his dream house, preserving the equity that he built in that house for 30 years. And him and his wife didn't lose a dime of losses in his retirement accounts and a teacher's pension that he rolled over into a IRA. You don't have to build your business this way. God bless you. Good luck. I don't even know how to coach a guy. I'm doing Cocos. Never done it.
Tell guys, I don't care if we're in Miami, I don't care if we're in a great city of Chicago, you can't go out, you gotta get rest. But guys aren't gonna listen, right? So a few times say, all right, we'll all go out. We'll go out together. But the next morning, I'm banging on your door at 5 a.m. Let's go. Where are we going? I hung out with you, now you come hang out with me. This is what we do, all right? Let's go. I would tell guys, I don't care if we're in Miami, I don't care if we're in a great city of Chicago.
We had Kobe Bryant at our event 2019. Sadly, it was the last big event he talked to before he passed away. And right before he comes on stage, I'm backstage with him because he's the keynote interview. I said, Kobe, I was asking questions about his relationship with Michael Jordan. And another question I asked, I said, Kobe, of all the companies for you to come talk to, why us? Why come talk to our insurance agency? Why come talk to the company that supposedly has all these negative reviews online? Why come talk to us? Why come talk to our organization of no fancy pedigree, fancy people from rich networks? We're just a bunch of middle-class, average and ordinary citizens in America that have big dreams and goals. Now we have a platform in an industry that can bring us to what we want in life if we work hard for it. And he leans in closer to me and he sniffs me. What was that, Kobe? Kobe, what do you do? Hold on, do that again. Let me get my let me get a selfie video. You do it. Anyway, he does it again. He goes, I smell it on you guys. What's that, Kobe? I smell obsession. I said, Kobe, listen, I don't go buy cheap cologne no more. I don't buy my cologne Walgreens. No, not that cheap cologne stuff. I smell you guys are obsessed. You're obsessed about what you do. And I can only deal and understand and associate with obsessors. We're obsessed with what we do. That's why our company is not for everybody. Because when you come across guys like us, think about this. If you are building a company, is a Kobe Bryant good for your company, good for your team, good for your club, good for your organization? Is a guy like him good for you? Absolutely. And does a guy like Kobe have a lot of options? Meaning that other people want him to be at their company or their team or their organization. Absolutely. So what is your job then as a sales leader, as a CEO, as a general manager, as an owner of a club, of a company, organization? If you have a Kobe Bryant mentality, he's raising the standards for his peers. Notice the coach isn't doing this. The coach ain't banging on the door at 5 o'clock in the morning. It's Kobe knocking on the door. Why? Because he's got standards. Here's the coach's standards. Here's Kobe's. standards. He's up here. He's the Mamba mentality. He took what he says was basically decent skills, but he worked so hard through his work ethic, he was able to accelerate here. But if he never worked harder, he'd just be an average player in the NBA. And that's why he's loved. That's why he's the Mamba mentality. That's why he's got championships. Why? Because here's the coach's standards, but here's Kobe's standards. Here's his players' standards, go party, hang out, do these things. And by the way, here's Kobe's mentality. I got the rest of my life to go see the club. I got the rest of my life to go party. But this finite period of my life, I could do something great with the physical gifts I have, with the opportunity I have. This time frame of being in my youth, in my prime, that I can maximize his opportunity to do something great. And he did. He's remembered for it. Why? Because of that mentality. Think about your situation, your business. How casual have we all become? By the way, I'm guilty of it. There's been moments I've been casual. Very less of them, a lot less of them, because I got big goals and big vision. Like I want to be in the Mount Rushmore of guys and gals in my field that have done what we've done, which is lead, build, and grow large distribution networks for the life insurance companies we do business with. My wife and I want to be on that Mount Rushmore conversation. When they say who the biggest and baddest builders are in the insurance industry who's ever built a team, built an organization, built a massive distribution with all these insurance companies now fighting to get in front of us to get us to sell their life insurance policies and annuities. I want them to be able to say, Matt and Sheena. These guys were dogs. These guys changed the game. These guys did something significant in their phase of business, and now for generations, my beneficiaries, my children, creating generational wealth, they're able to not only live on that wealth we created, but they're able to see YouTube videos like this with a grandfather, great-grandfather, great-great-grandfather at 51 years old in 2025, doing videos like this and casting a vision because he was thinking about something great, because God-given talents and abilities he's given me, and I have a stewardship responsibility to make his kingdom great through this YouTube channel. That at the end of the day, I want the name of Jesus known, not the name of Matt Sapaula known. I want my children to know that Jesus, God is in their life, because I don't deserve this life. Only by the big man upstairs, his grace has gotten me here. And because I'm here by grace, because I'm here with mercy, I want to maximize this opportunity to give back, to repay a debt that I can never repay back, for a man that loved me so much, to give me the opportunity to live here, and to think that my ancestors, my descendants in the Philippines don't have this opportunity because they're not here in America. And how much of a lack of gratitude would be if I didn't maximize my opportunities here. So it's my rant on Kobe Bryant's rule about going out. Think about what phase of your life you're in. What life did you sign up for? And then on top of that, what price are you willing to pay for that life? And how much time are you willing to pay that price? And when you get there, what's next? What's next? You got to answer those questions.
Some slimy salesman is trying to convince you that a whole life insurance policy is the path to wealth and a secret of the ultra rich. Prepare to find out what's really going on with whole life insurance and their shady salesmen. So what the hell is whole life insurance? I'm going to give you the 3 main characteristics, and then I'm going to rip it all apart, revealing the truth behind their exaggerated claims. You'll also find out what you should do with your money instead of buying this crap. Number 1, whole life insurance is a lifelong benefit. You've probably heard of term life insurance. You make a small monthly payment, and you would get a death benefit, for example, $1 million if you die. But typically, that policy ends at a certain age, maybe like 50. That's why it's cheap. With a whole life insurance policy, your $1 million policy never ends. If you die in the first week you have it, or at 90 years old, you still get the $1 million payout. Hell yeah, that sounds attractive, right? It's actually not. We'll get to why later. Number 2, whole life builds a cash value that you can borrow against. The salesmen like this one. It sounds sexy. This unique feature allows you to take loans from the money that is accumulated in your policy instead of using a bank. This is sometimes referred to as infinite banking or be your own bank, and it sounds attractive, right? It isn't, and I'm going to tell you why. And number 3, the cash value of a whole life insurance policy grows over time. These whole life insurance policies usually predict the cash value you are accumulating will grow on average at 4% a year. This seems pretty nice in light of all the other benefits. But it isn't. It's actually a really bad investment, and we're going to get into it right now.
Insurance
Let's
is never
start
an investment.
dissecting this and get to the truth behind the lies these salesmen are telling you. Remember,
All right, who is this guy? Rich on money. The moment somebody says that insurance is an investment, they're already discredited with me. Let's go to the about page. Money and real estate wisdom for military and veterans. Okay, I respect that. But there's no about page. Harris. Okay, Harris Atkins Real Estate. Okay, he's a realtor, 949 back in Orange County, and I spent time in the military. All right, well, all right. So he's a realtor. So I'm curious why a realtor is talking about life insurance, and his specialty is real estate. I wonder if he just went to Chat GPT and asked Chat GPT to create a content form, a teleprompter script, similar to what we do at certain moments. He's a realtor and experienced real estate investor. Has been featured on several large podcasts, including blog. Okay, blah, blah, blah. Okay, so he's a realtor, real estate investor. You lost credibility with me, buddy, if you're not in the life insurance business. But I will agree, though, the flip side to this, I'm not a big fan of whole life insurance. I'm a big fan of the flexible universal life insurance policy, and I'm a huge fan of index universal life policy. Is it for everybody? Absolutely not. Is term insurance for everybody? Absolutely not. You got to figure out what your situation is. There are some finite times you need term insurance, but there's some long-term periods where you need permanent insurance. And under subcategory, style of permanent insurance, you got permanent insurance, which will be there for the rest of your life. Is permanent life under another category is whole life insurance, universal life insurance, variable life, and index universal life. And under term, you got your term, regular vanilla term, and then return on premium term. And here's another thing too as well with these modern policies, what a lot of guys may be missing out on because of the scare of people changing their health. And we discovered this even more immensely during the pandemic, is modern life insurance policies today pay living benefits. And living benefits for the most part are offered by a few term policies and maybe 17, 18 different permanent life policies, index universal life policies for living benefits in case you suffer and survive a heart attack, stroke, cancer, or complication with diabetes, or you're just incapacitated, can't move around, but maybe later in life you need some assistance with home health care. That's what living benefits are used for, not to be confused with terminal illness benefits. So I don't want to react to this guy because this guy may not be factually right just because you go on ChatGPT or you can Google something. I don't know why this guy's talking about whole. It's like me trying to tell you about buying real estate. I own real estate. I own property, but I'm not licensed in it. I'm not behind the scenes in it. I don't have continuing education in it like I have right now in the life insurance business for 26 years. I have 26 years of continuing education talking to people in my field. So, hey, listen, all I'm going to say is good luck to you, buddy. And that's what you got to watch out for on YouTube. This is what you have to watch out for online. People like this using salacious headlines, using ChatGPT to create content without really having any experience, or in this case, licensing and experienced clients, because I promise you this, there's never been in the history of my career in 26 years of a beneficiary saying, I'm not taking that death benefit from a term policy or whole life policy. They've always accepted a term policy. And on top of that, you know what I see also with many families, if they weren't our clients and they're reactive to this type of situation and they had insurance, they wish they had more life insurance. They wish a family member had more life insurance. They wish they didn't have to go through GoFundMe for life insurance. So I don't know why people dog on the life insurance industry all the time. It's our product over time, over the years, has gotten cheaper. Since I got involved, the 1980 CSO table for cost of insurance per $1,000 of life insurance per age, gender, and that scale of life insurance over time has gotten cheaper over time to buy life insurance. Not more expensive. A lot of products and services out there get expensive over time. Life insurance has gotten cheaper. Why? Because people are living longer. So I don't know why there's so many people on the bandwagon of dogging out life insurance. And here's what happens is that people are confused with life insurance. And guess what they do? They don't buy anything. And what happens is life happens and they don't have anything. Why? Because they got confused about somebody's TikTok or YouTube, et cetera, et cetera. I'd rather you have something than nothing. Have something than nothing when it comes to life insurance.
Do you know that's going to pay a 21-year-old $500,000?
You do. What type of mother are you? Your son's not going to college? Your son's doing that pyramid thing, huh? Hey, I drive the Lamborghini. Mama, don't have to worry about money no more because I know my purpose. Don't you let nobody steal your dreams.
I agree. Let's go. Who's this?
This is the dream that gets shared by the likes of companies like Primerica, PHP, and World Financial Group.
Wait, they're going to add our PHP logo on it. And it's not even the PHP logo. Great research, buddy. Great research. Okay, you know what you're talking about. That's not even our logo. It was never our logo.
Probably even heard well-known public figures such as Patrick Bet-David, Ed Milet, and even Marshall Faulk, a Super Bowl MVP and NFL Hall of Famer, promote them. I even had Marshall Faulk tactfully try and recruit me.
Dominic, what's up, man? It's Marshall Faulk, fellow NFLer. Just want to let you know that Transamerica is where you want to be, man. This is the place you want to be if you want to do anything big.
But if well-known influencers tell us how amazing it is, and others constantly share how they have hundreds and made millions of dollars, then why is the overall sentiment in the space so negative? Even WFG itself feels the need to justify that they are a legitimate company. They have an entire page asking the question, is WFG a legitimate business? Have you ever had a friend reach out to you that you haven't talked to in forever and have them ask, how are you doing? Then within seconds proceed to tell you about an opportunity that will change your life? Or maybe you were like this guy who was thinking he was building a relationship with someone just to find out.
What does it say? I've had people pretend to be my friends and women pretend to be interested in me or even dating me when in reality they just wanted to sign me up for the MLM. They got it. Listen, man, there sounds like a lot of hurt people out there in America today. Listen, I find it an honor to be on somebody's list to be recruited and be sold anything. Do you realize that people only want to recruit people that they think, I mean, for the most part, not everybody, but for the most part, I want to be on somebody's top 25 list. I want to be somebody's potential customer that says I either have the money to buy things from them and I have the opportunity to add value to the company, the branch. Now, assuming it's legitimate. And let me just fast forward through all this type of stuff. I don't know why these life insurance MLMs are scamming you. The whole insurance industry is an MLM. The whole life insurance industry is built on multi-tiers, manager, general agent, AFMO. Forget the company, the industries. And by the way, what other company out there doesn't have that type of tier structure? And in order for you to make money in the insurance MLMs, you have to be licensed. You don't have to recruit a soul. You don't have to recruit. I didn't recruit anybody for the first 12 years of my life. From 1999 to 2012, I recruited staff. Maybe I recruited a couple of junior advisors, but I didn't need to recruit anybody to make money in the insurance business. Come on. I mean, by the way, these type of videos get the people who are operating in fear to watch it. And they monetize your fear. They monetize your doubt. They monetize the fact that you come off the ledge on their side and they're like, yeah, thank you so much for watching my videos. Really, that's the value? Versus listening to Ed Milet. I'm not a fan of Ed Milet, but I'm just saying Ed Milet, Patrick Dave, high fives at PBD, Marshall Faulk, watched him when I was in boot camp in San Diego, and he was still in college there he was an Aztec, San Diego State. I interviewed Kurt Warner, his Super Bowl buddy, his Rams buddy. If I'm being recruited, I consider that an honor. Instead of just saying no, you have to create videos like this to monetize people's fear. I mean, let me just dispel it. Let's cut to the chase. In the insurance industry, MLM companies, like you just mentioned, WG, Transamerica, Primerica, by the way, Primerica today, if they're really a scam, if Primerica, and by the way, I'm not with Primerica, I'm PHP. But if I'm looking at the stock market, Primerica today, their stock is what? They're let me see here. Go to my stocks app. They're what? A PRI. Okay. Their stock is $260 a share. Their market cap is $8.5 billion. Their EBITDA is probably about $600 million, $550, $600 million, 15x multiplier. They're $8.5 billion market cap, publicly traded. You don't get to be a publicly traded, highly scrutinized organization on the stock market for years if you're in an illegal pyramid. And by the way, I'm not in Primerica. And by salute to anybody in Primerica. I'd rather people in America have a Primerica policy than no policy. That's the problem in America. Not they have their wrong style of insurance, a whole life or term. That's not the argument. The argument in America today is that more generational wealth is not created because of confusing videos like this. They get people to an area of indecision with their finances and they never get life insurance. And sadly, some shit happens to them. They pass away because they listen to some dumbass videos like this. And people say, whole life or term insurance policy. That's not the fight. The fight is what? That America doesn't have life insurance. No matter what ethnic race background you are, people are confused with these type of things because they're not being educated. They're being preyed on their fear not to buy it. And these insurance companies are pricing these policies that dare you to buy life. I mean, think about this. You pay $25 for an insurance policy. You get a $250,000 coverage. What? You pay $300 a year for something happens to you. You pay $300 into the entire year, and $250,000 goes to your beneficiary just in case. What a crazy benefit! Why wouldn't you do that? But yeah, you want to put $12 for your app, Apple. What do you call that? Apple Care. You insure your car, you insure your house, you insure your apartment, insure your Xbox, your Sony PlayStation. When you buy it at Best Buy, you insure that. You don't want that to go bad. How many times you buy electronics on Amazon and there's a little click button to make sure you have a protection plan? You buy that shit, but you don't buy a policy to make sure that in case something happens to you, that the people you ever care about are taking for your financial responsibility and stewardship to make sure the people you brought into this world and ushered into the world to have your last name is taken care of long after you're gone. You don't buy that, but you listen to bullshit like this. Outside of that, I don't have any strong feelings about it. But good luck to this guy and whatever he's doing. More power to you. And I hope you get what's coming your way, whatever that is. The big man upstairs will decide that.
Okay, so what exactly do you guys do?
So say, for example, I meet him, okay? And I say, so what do you do? I'm doing X, Y, Z. Are you happy with your job? Not really. How much money are you making? 80 grand a year. What are your dreams? I want to have a house. I want to send my kids to private school. What kind of money you need to make to do that? $250,000 a year. How soon is, Vlad going to pay you $250 to be able to do that? Not anytime soon. What are you going to do? Stay here? You want your dreams to become a reality? I want to do something big. Great. Why don't you get an insurance license part-time? I'm going to teach you how to sell the product. And then from there, maybe you make $1,000, $2,000, $3,000 a month part-time. And then if you later on get good at it, you can go full-time. Then maybe you can become a broker. That's pretty much what we do.
So you sell insurance, life insurance, and other types of insurance as well?
Not auto insurance. It's strictly life insurance.
Strictly life insurance.
Life insurance and annuities. I used to be Series 7, 66, 31, and 26, where I could sell stocks, bonds, mutual funds, commodities, futures. But in PHP, it was only insurance and annuities.
Everybody, just so you guys know, we sell an actual financial product. Patrick built a company.
Okay.
So many people out there right now are making so much money off his name, creating salacious headlines, because they know that will get eyeballs, because people want to see a guy like him fall. It's the tabloid National Enquirer play. And so if you got involved, whether with PHP or, as I mentioned earlier in this video, Primerica or WFG or any other insurance company, and you have an insurance license, and you're out there selling insurance, life insurance, and annuities, you will make money. And it's not predicated upon you having to recruit and build a team. I got a guy right now in my Chicago office. He's got a radio show. And portion of that radio show is financial education, financial literacy. And what he does is he educates people to call the radio show, and they bring all those leads to one of our local brokers up in their Chicago office. And the local broker decides what's suitable and affordable for the client, and they get a policy. All this guy does is refer, and he's insurance licensed. Some people decide to come on board his team. Some people don't decide to come on board his team, but a lot of people become his clients. Guy's making $250,000 a year. Now, results vary. It's not typical, but that's the power of being involved in the insurance business, regardless if you're recruiting or not. So people often have this misguided thing that the only way you grow, the only way you have luck. Listen, guys, I started this business when I was 22, 23 years old. I had a 70, 80% contract. I at one point was at 140% commission contract. Today I'm at 75. Happy to be at 75 with bonuses. And due to contractual guidelines, I can't tell you what I'm earning or what my guys earn. But I can say this. We make income that I'm glad I'm in business. I don't want to oversell it. I don't give you guys promises that being involved in PHP or in the insurance industry is a life-changing moment, because there's a lot of people in our industry that fail. Why? Because they don't work the business, not because the business is bad. Insurance has been around in America since 1759. Come on, guys. This is a 2,000-year industry. It's an old industry. So this is not like something new. So let's continue, PBD.
And PHP stands for people helping people.
Yes.
Okay, now selling life insurance is a very old business in
Hello.
America.
Yes.
You
Very
guys,
hard.
You guys did not come, you're not the first, the first to do this. How was it you differentiated
Why are
your
we different?
company
Here we go,
from
people. Let's
all
go.
the established companies that have been doing this for probably 100+ years?
That's a great question. So here's what I did. When I was at the
Culture,
time
man.
when
It's
I was
culture.
working at Bally's, I sucked in my first month in sales. A month later, I'm about to go back into the army, and Cisco, my boss, he says, before you quit, go sell memberships at Fox Hills Mall. I said, I can't sell memberships in the gym. You want me to sell gym memberships at a mall? He said, just trust me. Go there. You're going to work with a couple guys. These are professional hustlers. You're going to learn. I said, great. I don't know if you're familiar with Fox Hills Mall, so I go to Fox
It's
Hills
in
Mall.
Inglewood, right?
It's in Inglewood. It's
Yeah.
like right by, yes. So I go to Fox Hills Mall, and a day later, 2 days later, a week later, I sell my first membership to a girl, $75 down $30 a month. I can't believe she's giving me a credit card in a mall to sign a 36-month contract. Then I sell my second, third, fourth, fifth. Then I become the rookie of the month. And so then I realize I can sell. So then the question is, am I going to sell memberships for the rest of my life? What product do I want to sell? The good news was I worked under a couple of guys that were very good in sales, so they taught me good habits. Cisco was a professional at Bally's. Dexter was charming. Ruben was systematic. Joe Reyes asked the right question. Molina was great on the phones. I'm watching everybody to kind of learn how to get better at
That's one thing in PVD. PVD doesn't forget names, man. He's got like elephant memory. Patrick will never forget names.
this. And then afterwards, I'm looking at all the industries. I'm like, am I going to do real estate? Am I going to do this? Am I going to do that? And then I chose financial industry. So the part about PHP that differentiated us than everybody else is, while I'm at Transamerica, I'm watching what's going on with elections. I'm watching what's going on with social media. In 2004, if you remember, Ron Paul in his 60s raised $6 million in 24 hours on MySpace running for office. I'm like, 6 million, it was a record breaking number. Nobody could believe an independent guy raising $6 million in 24 hours on MySpace. Then I saw Obama come in, gives his speech at the DNC, and a one-term senator becomes a two-term president. And his first campaign, he raised money from a bunch of Hispanics, $5, $10 Facebook ads. He was the first guy that understood the part of the Hispanic vote. And then everything was about woman power, women boss, girls in business, entrepreneurship. Then a data came out showing me that for every dollar that's made, 75 cents of the decisions made by women, more than 25, because they're the ones that's going out there doing most of the shopping.
Here's why
So
we're different.
you're thinking, who's
Here's why we're
pulling out the
different.
decision?
He's about to lay it
So then
down.
when I saw all of that stuff, and I read a book called Blue Ocean Strategy. I don't know if you've read it. Fantastic book. In Blue Ocean Strategy, it explains how the concept is that most people are in a red ocean. For example, let's look at the podcast side. Who was the first person interviewing hip hoppers that got as big as you did?
Like as big as me?
As big as you.
Charlemagne.
I don't know if I can think of anybody. You may say Charlemagne.
Charlemagne, yeah, I was going to mention Charlemagne. He kind of came up around.
But it's really the
time.
two of you guys.
Yeah, and he was working under the Breakfast Club.
So watch this now. Yeah. So you guys have a blue ocean. Everybody else is trying to do what you guys are doing. They're now in the red ocean. It's too late. You've dominated the marketplace. You have a big edge. Now, if you don't recreate yourself and improve, new guy can come up. But the whole concept about blue ocean strategy is don't directly compete with somebody. Find a way to differentiate yourself from other people. And the formula is actually very simple. Increase something others are not doing. Decrease something everybody else is doing. Eliminate what everybody else is doing and create something new that nobody else is doing. So,
see, by the way, if you are ever around Patrick, he'll always read a book and he's looking for the formula. He's looking for the pattern. Like he'll go through all the flip. So Patrick is, a lot of people don't realize that he's a whiz mathematician. He'll do math in his head, like advanced math, not algebra, but advanced math in his head quickly. And he's a self-didact. He's a self-learner. So think about this. For every book that you read, what formula, what patterns of success are you taking from it that you can adapt into your business, into your life to help you get better results? That's what Patrick does with every book. And he remembers a lot of things. These are some of the behaviors I learned from him the last 10 years.
for us, I looked at this and I said, here's what we're going to do. One, we're going to target women as insurance agents because at the time, by the way,
51% of our companies, women.
100 agents, only 17% were women. Insurance industry didn't recruit women. They recruited men. 83% were men. Then a report came out from LIMRA saying the average insurance agent was a 56-year-old white male. 56-year-old white male. Wait a minute. The biggest generation is boomers, but millennials are big. Why are we not targeting this interest? And so maybe the insurance industry was dying because their agents were going lower. They went from having 500,000 agents to like 200,000 agents. People were leaving the industry. So I said, perfect. Here's what I'm going to do. I'm going to bring young girls and I'm going to target minorities kind of like myself, so Hispanics, African Americans, and then we'll compete in the marketplace from an angle where if I go to a house, if I'm selling you and your wife may not like me. She's done. She's not going to buy. You and I may hit it off, but she may be like, babe, I don't trust this guy. When she walks over to the bathroom, I need to text you, go over there. But if a girl comes to your house to sell, she's going to be like, oh, I understand her because she's a wife, like she's a mom like me.
So that's exactly the dynamic I have between my wife and I. Sheena's the better agent than I am.
And you're going to want to buy from a woman, maybe more than you're going to want to buy from a man. So we went that angle. And then the average agent today is a 34-year-old Hispanic female in the company. 51% of our company are women. 54% are Hispanic. We're the largest percentage of that in the marketplace. And that was our advantage. That was our edge. Obviously, social media helped because at the time, nobody wanted to touch social media. So that was the advantage we saw as a differentiator. And then by the time we had already taken off, everybody tried to copy us. It was already too late.
That's right. We have so many copycat companies out there copying what we're doing. Patrick like inspired a generation of wannabes to create their own companies. And more power to you. It's harder than you think. And hope you stay in business because to see what Patrick has done the last 10 years, working with him side by side and totality of 15 years at PHP, it's a different beast. He's a different beast. And I know a lot of the competitors out there, you're about maybe 1/10 of PBD. And by the way, don't let me tell you that. Your numbers say that. Your team that leaves you says that. The reputation you guys have in the marketplace says that. And I'll just say this too as well. Since acquisition, Patrick, there's many videos out there. Patrick sold the company for nearly $300 million. I think we skipped that part. But we grew the company close to 70% for the last 2 years. We've grown the company immensely. Our guys just got some handsome compensation I can't disclose. But you got to figure out where you want to hang your sales skills for the rest of your life in an industry that hopefully pays you what you're worth. Because there's a lot of people out there that work hard. But you got to work hard at the right things that maximize your value. So if there's high income paying skills for you guys to consider, number one, you better be adding value creation to the top of that list, sales skills to the top of that list, negotiation to the top of the list, leadership development to the top of that list. These 3-4 things will help you become a person that most companies never want to lose. And they'll create positions for you at that company no matter what. Value creation, sales skills, leadership development skills, negotiation skills. I found these 4 skills to be absolutely game changers for our company. But my wife and I do together combined as partners. We see other people in our industry doing. So that being said, what is your biggest takeaway? Please put in the comment section below. Do you enjoy these reaction videos? What would you like to see me react to next? Please put it in the comment section below. If you haven't done so yet, make sure you subscribe to the 7 Figure Squad YouTube channel. The channel helps you think like a millionaire, strategize like a millionaire, so therefore you can be a first-generation cash flow, faith-made millionaire. From Dallas, Texas, I'm your money smart guy, and until we meet again. Continue smart, and be money smart today.